Awesome. This is Mr. Chuck. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button down there. And I promise you that will make your academic problems of accounting a thing of the past. With that out of the way, let's get into the lesson of the morning. Now, in this morning's lesson, we're going to do cash flow statement and financial indicators. And the question that we are supposed to do consists of 40 marks and should be completed in 30 minutes. So we are going to do it quickly. Now, the first thing that the examiner wants us to do is to choose the correct words from those that are given here to match the statements. So the first one says, the instruction says, choose the correct words from those in brackets, write only the answer next to the question numbers 2.1.1 in the answer book. So what I'm going to do here, I'm only going to just highlight the words that are relevant. Okay. So here the statement says that shareholders' equity or dividends are earnings by shareholders as a return for their investment. So here the right word will be dividends. Remember, dividends shows the returns that the owners have made from the company. Okay. Next, they're saying that a decrease in debtors indicates a cash inflow or outflow. This will be a cash inflow because remember, if your debtors are decreasing, it means that they are paying you. And then next, they're saying that interest expense is classified as operating expense or financing expense. Interest expense will be classified as a finance expense because if you check under operating expenses, we don't have interest expense. Okay. Next, they are saying that the information below relates to the financial year ending on 31 May 2025. Their business buys and sells technological products. So when it's like this, what we need to do is to firstly establish the beginning of the year. So remember, our year will start on 1 March. It will start on 1. Remember, if we end in May, we're going to start on the 1st of June. 1 June 2024. Then we'll end on the 31st of May 2025. Okay, you can check it as follows. So it will be June, July, August, September, October, November, December, January, February, March, April, May. It should be 12 months. So we'd have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it means that our interpretation of the financial year was correct. Now, before you do anything, I always suggest to learners that they must start with the things that are the easiest to finish. So here, the easiest thing to finish is the financial indicators that you are required to calculate. Number one, they're saying that you need to calculate net profit after tax on sales. So it means that when you go to the answer book, you don't have to write the formula because it's given. So you just start by entering the amount. Okay, so we are going to look for our net profit after tax, which we will get from our information. Our net profit after tax here, it's 1,633,100. So we are going to say 1,633,100. We are going to come here. You will say 1,633,100. You divide it by our sales. Our sales, according to this information, is 20,250. So we'll subtract by 20,250,000, and then you multiply by 100, and then it will give you the answer. So I'm just quickly going to show this on the calculator. So we are going to say let me put the calculator here. So we're going to say 1,633,100. You divide it by 20,250,000. Then you multiply by 100. It gives us 8.06%. So we'd have 8.06% here. Okay, so very important for you to be careful in terms of the basic calculations that you need to do. Next, they want us to calculate the net asset value per share. And then remember, in terms of net asset value per share, this one will work easy when you have calculated you have done the information here. So I suggest that you go back to doing you need to do the ordinary share capital note first before you go there. So it will be easy after you've done this, or we can check our basic information, what they are saying. Let's find out how many shares do they have at the end of the year. Okay, remember our end of the year. So here they're saying on the 31st of May 2025, there were 705,000 shares in each. So this 705,000 is the one that we are going to use because it's the number of shares at the end. So it means we are going to say, remember, net asset value is shareholders' equity divided by number of shares issued. So our ordinary shareholders equity here is 8,950,000. So we're going to say 8,950,000, and then we divide it by 705,000, and then we multiply by 100 cents because our answer should be in cents. So we are going to say 8,950,000. Okay, let me do it like this. Let me see if I can use it. Okay, so we're going to say 8,950,000, and then we divide it by 705,000, and then we multiply this by 100. It's going to give us 1,269 rand 69 and 50 cents. Okay, so we are going to write it like that: 1,269 and 50 cents. I hope this makes sense, guys. And then next, we are required to calculate. There's something that we are also required to calculate. We are required to calculate our dividend payout rate. So this one, you can calculate it until you have worked on the information that is here, until you have worked on the information at the top to find out about the dividends. But I think we can try to check what we have, because remember, in terms of dividend payout rate, you need to know what was the earnings per share, and then you also need to know okay, we can actually get it, but it requires you to have information about the shares. So since we know the shares at the end, we can do it easily. But I suggest that we go and work out the ordinary share capital first, so that we are sure with what we have said. Okay, so let's go back to that part of the question. We are going to come back here. We will finish with that one. Now, remember, they told us that at the end of the year, we have 705,000 shares, right? Now, we need to go to information that speaks about shares. So here they're saying that additional shares were issued during the year, but we don't know how many shares, right? So I'm going to draw the timeline. Remember, it's June, July, August, September, October, November, December, January, February, March, April, May. Remember, they told us that at the end of May, we have 705,000 shares. And then next, they are saying that on the 1st of September 2024, there were 800,000 shares in each. So it means up to totality on the 1st of September, a total of the shares that were issued was 800,000. Not that they issued 800,000 shares on the 1st of September. They are just saying that on that day, the total shares that were issued amounted to 800,000. So now, here they're saying that interim dividends were paid on 30 November 2024, but they didn't tell us the amount, so it means we need to look for it. Next, they are saying that on the 30th of April 2025, the company repurchased shares. The average price amounted to 85%. The average price amounted to 85% of the repurchase price. The shares qualify for final dividends, so meaning that when they pay out the dividends, they will include those shares that were repurchased. Remember, the repurchase took place in April here. So those shares, they will qualify when dividends are given. Okay. And then next, they are saying that a final dividend per share was declared on the 31st of May. So remember, they said these shares, they will qualify for final dividend. So it means we need to include them when those dividends are declared. And the next, they're saying that financial records on the 31st of May 2024 revealed the following: only 500,000 shares were in issue. Remember that if the year ends on 31st May 2024, it means it started on the 1st of June 2024. So it means the opening number of shares that was available at the beginning here was 500,000. Now, if we say 500,000 minus 800,000, it will give us the additional shares that we issued. So 800,000 minus 500,000 shares, it gives us 300,000 shares. So it means that the shares that we issued during the year issued is equals to 300,000. Okay, so in our answer book, on the part where they write shares issued, then remember here we have 500,000 at the beginning. So our shares issued at, we don't know how much, it's 300,000. Okay, now the problem here is that we don't know what was the amount that they were issued at, but we can check which condition can we apply for us to be able to get to complete this this note. Now, when you look at this, you will realize that we can actually find out the number of shares that we repurchased, because that is the missing figure that we have. So since we have the information, we will say we can just simply say the difference between you say, if you say remember, at the moment we have 800,000, right? So if you say minus 705,000, it will give you 95,000. So it means that 95,000 shares were repurchased. This information is going to come in very handy for us. And then after this, we need to now get information in terms of the average price. Now, there are three conditions that you can use to calculate your average price. Number one, you check first. You need to check when were the shares issued. If the repurchase takes place, to get your average price, you are going to take your opening balance sheet divided by the number of shares. But in this case, the condition will not apply because they issued first and repurchased late. So it means you need to check the second condition. The second condition says you take your opening in terms of money, you plus the money for the issued, and then at the bottom you divide by the number of shares that goes with those amounts. So in this case, you can see that the second condition also won't work because we don't have the amount for the issued shares. So it means it's also part of the missing figures. Okay. So when it's like that, you move on to the next condition, which is the third condition. Now, third condition requires you to have the closing amount of ordinary share capital and also the number of shares. You take your closing amount, you divide it by the number of shares. So it means you are going to say 7,191,000, and then you divide it by 705,000. It will give us the answer. So if we say 7,191,000 and then we divide by 705,000, it gives us 10 rand 20. So it means that the average price is 10 rand 20. Okay, so remember what happens is that when there's a repurchase, we repurchase at the average price in terms of recording on the ordinary share capital. So it means you will say that 95,000 repurchased at 10 rand 20. So in this case, we are going to say 95,000 times 10 rand 20, which gives us 969,000. And then after this, your issued now becomes your issued will become your balancing figure. So it means to get our issued in terms of money, we are going to take we're going to say 7 million. We work from the bottom, we go up. So it means we will change the signs. This will become positive, this will become minus, so that we can get what we want. So we are going to say 7,191,000, and then you say plus 969,000, and then you minus 160,000, which gives us 3 million. So it means that these shares, the total money that was raised from those shares is 3 million. And then maybe we want to know, so how much were those shares issued for? So if you take that 3 million, that you got, and then you divide it by 300,000 shares, because the additional shares that were issued, they were issued at 10 rand. So it means it will be issued here at 10 rand. Okay, then now you need to remember, where else are you going to use this information with regards to the movement of shares? This information with regards to the movement of shares will work when you do your cash flow from financing activities. So remember, in terms of financing activities, you would have proceeds from from sale of shares, which gave us 300,000. So you take it as it is. And then also remember, we have repurchase of shares, right? So we have repurchase of shares, and then so what we need to do, remember, your repurchase includes this triangle. You use this triangle in the repurchase. You'd have your ordinary share capital, you would have your retained, and then you'll have your cash flow. Okay, now what we want is this here. Now our ordinary share capital, remember, is 10 rand 20. So let's get information that can help us to get those other things. So here they said that the average price amounted to 85%. I mean, the average price is 85% of the repurchase price. So it means that the repurchase price actually is 15% more than the average price. So we need to look for that 15%, so that it can give us the amount that we would have to borrow from the retained income. So to do that, we are going to say we're going to say 10 rand 20. Remember, the 10 rand 20 represents 85%. So we say multiply by 15, divide by 85, which gives us 1 rand 8. And then if you add the two, if you say 10 rand 20 plus 1 rand 8, is going to give you 12 rand. So which means the total repurchase price is 12 rand. So to do that, to record that repurchase, we're going to say 95,000 multiply by 12. It will give us the total money that was used to repurchase those shares. So it therefore says you're going to say 95,000 multiply by 12 rand, which gives us 1,140,000. Okay, and then after this, we need to look for something else in the cash flow. We need to check if there was any loan that was paid or received. Okay, so when you look at this, they gave you information about debt equity, which must help you, because if you look at this, your loan, it's a question mark here. So it means that for you to be able to get it, you need to use a debt equity ratio. And then remember, the ratio says that you take your loan and then you compare it to shareholders equity. Okay, now our loan in this case is unknown, but our shareholders equity, we know that it's 8,950,000. So which means that 8,950,000 will come here. Okay, and then from there, remember, you are supposed to divide by 8,950,000, and also the side, you're actually supposed to divide by 8,950,000. And then they told us that the final answer for this was 0.6 is to 1. So if you check this tells us that for us to be able to get the answer that we want, when you look at this, it says that you are going to cross multiply because this represents the x, right? Now, so what you can do, you can think about what they did for them to get debt equity. So remember, for them to get debt equity, they divided. So it means if you want to reverse to get that loan, you need to multiply so that you can get the loan. So it means for us to get our loan will be 8,950,000 multiplied by 0.6. Okay, so we will do it like that. So 8,950,000 multiplied by 0.6, it gives us 5,370,000. So that 5,370,000 is the loan that we are looking for. That is the question mark here, 5,370,000. So you can see that from here to here, it means that there was a payment that was made because there's not any other additional information that you can use. So you're going to say 5,821,600. Let me check. So loan repayment. So 5,821,600. You say minus. You will say minus 5,370,000. Okay, so it means that we are going to say 5,821,600 minus 5,370,000. It gives us 451,600. But because it is a payment, it must be in brackets. Okay, and then from there you are done recording this, and then from there you check what else is the next easiest thing that you can answer here. Next you can answer net in terms of net change. Remember, in terms of your net change, you need your balance at the beginning, right? So it's balance at beginning, and it's also your balance at closing. Then you check what is the information that you have here. You remember, you need to go back to your information about cash and cash equivalents. When you do cash and cash equivalents, always make sure that you compare it to your you check what is happening in terms of your cash and cash equivalents and bank overdraft. So when I check here, in 2024 there was a bank overdraft of, I think it's, let me just erase here so that I can see, of 360,800. So it means that we need to get the difference between cash and cash equivalents, this 233,000 and this 360,800, so that we can know. But you can already see that bank overdraft is the greatest, so it means that we would have an overdraft for that. Okay, so immediately you put the brackets because you know you are expecting an overdraft. So we are going to say 233,000 minus 233,000 minus 360,800. So you minus 360,800. It will give us that amount that we are expecting. So let's do it. So 233,000 minus 360,800, it gives us 127,800. So we'd have that 127,800 here. And then after this, you check the balance at the end. You must also check that condition if there is an overdraft that is there. So luckily here we didn't have an overdraft, but at the end for cash and cash equivalent, we had let me erase, I think it's 936,000. I would have to unzoom it first. Okay, so I'll have to erase here so that we can see clearly what we have. So cash and cash equivalent, I think the amount is 936,000. Okay, so we'll write that 936,000 here. Then from there you work from top, you go from the bottom, you go up. Remember, if you are moving from bottom, you go up, you change the sign. This is plus. Okay, so it means we are going to say 936,000. I'll put it here, 936,000, 936,000, okay, plus 127,800. It gives us 1,063,800. Then you are done answering this part. Then from there, what you can do, you can look for additional information. You can look for additional information that you can get. You can look for additional information that can help you to answer other questions. So next, they want us to answer taxation paid. So in terms of taxation paid, you need to be very smart. Always start with the principles that I gave you. Remember, I gave you some foundation for SARS. I said for SARS, this is what you need to check. In terms of your opening, your debit is a positive, your credit it's a minus. And then in terms of closing, I said the following: your debit is a minus, your credit it's a plus. So when you do this, you need to keep these principles in mind. Okay, so for SARS, when we check our SARS income tax from last year, it is a positive because they have to refund us. So we're going to have 111,000. And then remember, income tax from the financial statement is always negative. So it means that you're going to put it as a negative. So this 553,000, it will be a negative. So it will be minus 553,000. And then we also check what is the balance at the end. The balance at the end for SARS, according to here, is a debit balance of 37,000. I think it's 37,600. I think it's not that clear, but I think it's a 6. 37,600. Okay, I'm gonna try to check this from my phone so that I'm sure whether it's a 6 or a 7. Okay, but in the meantime, remember what I said. You need to remember your signs. You need to remember your signs. Remember whether it's a debit or a credit, and know which sign are you supposed to use from that. Okay, so when I look at this, according to our information, yeah, it's 37,600. Okay, so it means you're going to say minus 37,600. Why minus? Because remember the principle I told you. So when it's like this, when we calculate it, we are going to do as follows. We're going to say 111,000 minus 553,000, and then minus 37,600. It gives us 479,600. So we have that 479,600 in brackets. Okay. Then next, they say we need to calculate dividends paid. So in terms of dividends paid, you see, guys, it's 5 marks. It means that it won't be as easy as you think it would be. But what you can do for dividends paid, you can look at the information that they told you. They told us that let's check. So on our information, number one, we need to check firstly we know that, remember, you must check if you have last year's shareholders for dividends, right? So last year's shareholders for dividends, it's a question mark. So it means you need to figure it out on your own. Okay. Now, so what we are going to do, we will do the following. We are going to do the following. So this is what we are going to do. This is what we're going to do. We are going to go to the information that will tell us what was the dividends that we paid in the prior year. So here, in the following information here helps us to get shareholders for dividends from last year. So they are saying that a final, remember they had 500,000 shares in the prior year at the end. And then they said 22 cents per share was declared at the end. So to get that declared, it means you are going to need to say, I'm going to go back to our answer book. So to get that declared, you are going to say 500,000 multiplied by 22 cents. It will give you declared from last year. Okay, so 500,000 multiplied by 22 cents, it gives us 110,000. So that's the first part that you were supposed to figure, which is 110,000. Okay, then we need to check, for this year they told us that dividends per share amounted to 48 cents. So we need to check at the end of the year. Remember, they told us that those shares that were sold, they qualify for dividends, right? So we know that at the end of the year, because those dividends they qualify, so it means they declared on all the shares that were available. So we know we have that dividend per share is 48 cents. So it means, if we can say 800,000 multiply by 48. So if you say 800,000, let me see, 800,000 multiplied by 0.48, it gives you 384. So a total of dividends paid and declared is 384. But what you have, you are only given here shareholders for dividends of 224. So it means if you take this and subtract that 224 of the declared, it will give you your paid. So when we do this, we are going to say 384,000 minus 224,000, 224,000, which gives us 160,000. So our paid is 160,000. So you take this paid that you have here, you bring it here. So it will be, so in other words, when we get our final answer, remember you must show your calculations. So you're going to say 110,000 plus 160,000, which gives you 270. So our dividends paid is 200, and interim dividends paid is 270. Dividends paid is 270,000, because remember our paid is last year's declared plus this year's interim. Okay, so that's how you can easily end that 5 marks. Now next you can check what else do we have to answer. Okay, I think there's a part where we had to, okay, I'm gonna check. So remember, let's come here first before we end with that one. So here they're saying the directors have identified options to fund the additional 1.5 million to import the new products and expand the business without increasing the business risk in the next financial year. What funding options can the company consider without taking out additional loans? Code to financial sources with figures. So they want to buy products overseas so that they can use them to sell the business. But here, what the examiner wants you to do, he wants you to tell us where can these people get the money. So you need to look for the following. Number one, remember they had 3 million that was raised from issued shares. So you can have that 3 million from issued shares. And then now, because they want to expand the company, you can check how much was their retained income. So our retained income here is 1,759,000. So they can also use a portion of the retained income. So they can also use retained income of 1,759,000. Okay, so you have already answered the examiner here. And then next, he wants you to calculate the dividend payout rate. Now remember, in terms of a dividend payout rate, the dividend payout rate, what you do, you need to check out of how much they earned, how much did they pay. So it means you would have your dividends paid. So to calculate it, I'm gonna write the formula. So we need dividend paid divided by earnings per share, and then you multiply by 100. So what do you need to do? Dividends, we know that our dividends is, they said it's 48 cents, so it means it's 48. So we need to look for earnings per share. So for us to get our earnings per share, we need to remember what was how do I put it? We need to remember what was the number of shares. Ne? So when it comes to this, you need to remember in terms of earnings per share, it's going to be tricky, because even the shares that were repurchased, they would qualify for those dividends. So when you do your earnings per share, it means you also need to consider the fact that there were some shares that were sold. But what you need to do, you need to check on the exact day those shares were sold. I hope this makes sense. So what we need to do, we need to try and remember uh, how that was done. Remember here, what we need to do, earnings per share, we need to remember the formula actually. How do we calculate that formula? Okay, so but we know that the dividend payout rate says that earnings per share divide by, it says earnings per share divide by number of shares that were issued. Okay, now so what we are going to do, I want to us to check something. Remember, all those shares, they qualified, right? So I can't really see some of the information clearly here, so I'm gonna check on my phone just for a minute. Um, okay, so remember, to do your earnings per share, you need to calculate it on the side. So our earnings per share, because the shares that were sold, they qualified for everything. So it means we need to include them. So you are going to take your net profit of 1,633,100. You divide it by 800,000, because those shares, they qualified for both interim and final. And then you check how much you got. So we're going to say 1,633,100 divide by 800,000, and then we multiply by 100. It gives us, so if you say 1,633,100 divide by 800,000, and then you multiply by 100, it gives you 204 point, I'm gonna say 14, just to keep it to decimal place. So when we do our earnings per share, we're going to say 48 divided by 204.14, and then we multiply by 100. It will give us the rate that was paid. Okay, so you are going to say 48 divided by 204.14 multiplied by 100 is going to give you 23.51%. I hope this makes sense. So obviously, guys, what is important when you calculate this is that you need to make sure that if you are using rent, your dividends paid and your earnings per share, they should both be in rent. If you are using cents, everything should be in cents. I hope that, guys, this lesson has helped you a lot. And then remember, you were supposed to complete this in about 30 minutes, but because I'm explaining for you and I want you guys to understand, we went 10 marks a little bit, 10 minutes a little bit extra. If you want us to tutor you, you're more than welcome to contact us. Our contacts are 073 036 3208. You can send us a WhatsApp message, and then our lessons start from 500, where you are going to get 8 lessons to prepare you for the exam. And I promise you that accounting will never be a problem for you. Thank you so much for watching. God bless you. Shalom.